Alright, what's going on, you guys? It's Royce Jacob. Welcome back to the channel and welcome back to Stock Talk, series I make whenever I feel it's necessary, where we cover some exciting news and price action in regard to some of the stocks we've been talking about on the channel. In today's case, though, we are not covering stocks that we usually talk about. If you're familiar around here, you would know that we focus more on smaller, more up-and-coming stocks. But today, we're focusing on some titans of industry. I'd be surprised if you guys don't know these names. I'm sure all of you do. Apple, Amazon, Google, and Facebook. The reason I wanted to cover these today is because they all announce earnings tomorrow, okay? And I don't think those earnings are only important for these companies, which they obviously are, but I do think that they will have an impact. They will make waves on the equity markets as a whole. These four companies, considering they're so large, do consume a large percentage of the equity indices, so the S&P 500 and NASDAQ 100. So I do think that these earnings will make waves throughout the entire equity indices, throughout the entire equity markets as a whole. So I figured it was important to talk about, and I did want to talk to you guys about this because there's a lot of exciting things happening within big tech. All right, so over the course of this video, we will cover each of these charts on TradingView. We'll go down the line here on the watch list, as you can see here on the right. Apple, Amazon, Google, and Facebook. We'll take a look at each of the charts. I'll let you guys know what I'm thinking from a technical perspective and price action perspective. And then we'll also go over a couple articles, okay? So this first one is talking about the earnings specifically. And then this other one talks about the hearings of the tech CEOs that just happened today. They testified during Congress. So I want to talk about that a little bit because that definitely does fundamentally impact these companies, okay? So before we do get into it, I will ask you guys to please give the video a like if you do go on to gain value from it. Subscribe to the channel if you're new around here and want to catch more investing content like this. And check out my complete portfolio and daily newsletter. First link in the description if you're interested. All right, so you guys know the drill. We do have to touch on the articles first, establish a fundamental understanding of what's going on prior to getting into the charts. All right, so let's kick it off with the CNBC article. Big tech, including Apple and Facebook, report earnings late Thursday, which could mean a crazy crazy market day on Friday. I definitely agree. I think it could be not only a crazy day on Friday, but from here to come. Okay, so let's read on. Four big tech names worth nearly $5 trillion. That's insane. All report earnings Thursday, and that could create crazy market volatility if one or more disappoint. Apple, Amazon, Alphabet, and Facebook are all scheduled to report in the 4 p.m. hour Thursday, and they, along with Microsoft, have led much of the market's gains. Whether they reported in 4 days or one, we're getting the same news flow. What it does represent is a large amount of volatility when the numbers come out, said one analyst. Big tech could be about to make a big splash. For the market's five biggest stocks report earnings within a single hour on Thursday afternoon, and that could cause big volatility in after-hours trading and again on Friday. Apple, Amazon, Alphabet, and Facebook, worth nearly $5 trillion in combined market cap, are all market favorites in releasing earnings results just after 4 p.m. Eastern Time. Friday is going to be crazy, said Dan Niles, founder of Alpha One Capital Partners. If anybody misses their numbers, that's not going to be good. The outperformance of these companies against the broader market has already raised concerns that too much of the market's momentum is concentrated in too few names, and the reports coming out all at once will be a lot for investors to digest. They've collectively had the biggest impact on the market, and it's their momentum that could determine whether NASDAQ continues to hit new all-time highs. In addition to the financial results, the companies could provide a first look at how their businesses have been impacted in the last couple of weeks as more states shut down and some activities due to the spread of the coronavirus. Okay, so this is an important chart right here that I really want to show you guys, okay? So, big tech earnings. Major tech companies are reporting earnings Thursday by market cap. Okay, so this is the NASDAQ 100, this is the S&P 500. In the beginning, remember how I mentioned that I do think that this could make waves throughout the entire equity markets, equity indices for sure. Again, NASDAQ 100, look how much of the NASDAQ 100 just these four companies consumes, okay? That's a solid like 30% of the NASDAQ 100. S&P 500, that's probably close to like 15% of the S&P 500, okay? So $5 trillion, we're not talking about a little bit of money here, okay? So these earnings reports, again, are not only significant for the companies themselves, which they very obviously are. It's important for the equity markets as a whole, and it really will impact investor sentiment as a whole, and that will resound throughout the entire markets. Remember, you guys, the markets, it's an ecosystem. It's an entire ecosystem. It's not just sectors acting on their own. Like sometimes there's very rare cases. You guys know what I'm talking about, though. It's one big ecosystem. Things like this, especially like titans of industry, like I was saying earlier, like this, reporting earnings, will for sure make waves, okay? So if they make some comments that advertising spending is starting to slow in the last couple of weeks, how are people going to take it, Niall said. With stocks up this much and so many people owning stocks in the retail market, they might not be as informed on what they own. That could create some really wild action. We'll close it off here. The big tech companies typically report within days of each other, but this quarter they ended up all together. Facebook would have reported Wednesday, but it changed the date to Thursday. Facebook CEO Mark Zuckerberg and the CEOs of other three big tech companies all testified before Congress Wednesday. All right, so that's a beautiful segue into the next article. Let's go straight into it, and then we'll get into the charts. Okay, so antitrust questions bruise but don't break big tech CEOs in historic hearing. After 3 hours of questions, expert calls hearing a mix of antitrust ambush and political grandstanding. Okay, so we'll just read a little bit of this. Not going to go through all of it, just a few highlights. It's been a bruising day for tech's biggest names on Capitol Hill, but they didn't break. The CEOs of Google parent company Alphabet Inc., Google, GOOG, Amazon, Apple, Facebook entered more than 5 hours of grueling questions about competition Wednesday from House Judiciary Antitrust Subcommittee members in a series of sharp exchanges. Okay, so you can see here, all of these names were up on the day. Okay, so that is an interesting sign that they are up before earnings. That does show positive investor sentiment within the markets, and it makes sense considering tech has been doing well. Tech is kind of on fire right now, rightfully so. But I will get into why it worries me and why I'm skeptical once we get into the charts. Okay, so our documents from Facebook show it considered Instagram a competitive threat that could meaningfully hurt Facebook, so Facebook bought it. In another clash, Amazon CEO Jeff Bezos was hesitant to deny Amazon uses data from its third-party sellers to build its products. The charge outlined a Wall Street story could be the focus of Amazon investigations. Okay, so I did watch some of this live, you guys. I will tell you, I don't know if you guys watched it too. This was so cringe just watching these people, these politicians, just question these titans of industry, these CEOs who have worked so hard to obtain the status and build the companies that they have. It makes me mad, you guys, because I'm a free market capitalist, right? You get what you earn. You get what you deserve. The market is the market. The people dictate who is successful and who's not in the markets. Okay? And that's why just seeing these politicians roast these guys, for specifically Bezos, when they're talking to Bezos about third-party selling, it was truly pissing me off because I've sold on Amazon in the past. I've done very well selling as a third-party seller on Amazon in the past, and Amazon is providing so many damn opportunities for so many people through third-party selling. So it's pissing me off hearing these people, these politicians, these slime balls, who do mean well. I don't want to call them slime balls, but it's just so there's just such ignorance, and I'm not going to rant on this too much, but. Again, you guys, I'm a capitalist. I'm sure a lot of you are as well. This is a free market. That's the beauty of a free market. The market dictates who is successful and who is not for the value they provide, okay? And that is the beauty of meritocracy right there, all right? So, again, not going to get too deep into that, but again, this could dampen investor sentiment. I was not fazed at all by this, but there's some people who might be after watching this. Just because, again, these companies are huge. It makes sense why this antitrust committee was held and why they had to testify in front of Congress, because they're huge companies. They have a lot of power. And again, rightfully so. They've established that power after years of building these great companies, okay? Again, you are directly compensated for the value you provide. If you provide a lot of value, you get a lot of money, and that's capitalism, okay? So, that said, that was kind of a rant. Sorry about that. Let's get into the charts here. So we'll kick it off with Apple again. We'll go down the line here. So Apple, I told you guys that I'm hesitant on this already. The economy is objectively very bad. You can't argue with the fact the market and the economy, two very different things. I've said that many times. For you new guys, I do know that. It's very evident at this point that the market and the economy are two different things. The Fed is keeping these markets floating and it's good. They're keeping pensions alive. They're doing what they need to do to eliminate the utter collapse of an economy, or a complete collapse. The economy still sucks, but at least the markets are floating. So there's a light in the darkness in regard to the markets. So it still worries me, although tech, even in a Corona economy, everyone's home. Tech, it makes sense that tech is doing well. Tech, cloud, semiconductors, etc., are doing well. So that said, all of these stocks that we're talking about today are at all-time highs, which is very, very worrisome to me, okay? Because the economy objectively is still very bad, okay? So it does worry me. Apple, we're sitting at, what's Apple? Apple is now a $1.65 trillion company. That's $1,647 billion. That's insane. That is crazy. And it's worrisome to me. As far as the earnings are concerned, I can't believe that Apple will impress on earnings, just considering they've shut down so many stores. I know people are online is a huge thing. E-com, everyone's comfortable buying online. I buy my Apple products online. Regardless, I live on the Big Island of Hawaii. We don't even have an Apple store here, so I'm forced to do so. I imagine a lot of other people are adopting as well. It's not a big issue to buy it online. I prefer it, to be honest, but I feel like Apple stores, just intuitively, Apple stores being open drives so much foot traffic. Those Apple stores, you see them, those things are packed all the time, literally all the time. So it only makes intuitive sense to me that even with online, people know online's a thing, that sales are going to be down. That's inevitable. For the foreseeable future, reopening is still so gray. Nothing's a sure thing right now, so it's still up in the air. Guidance is probably going to be a little whacked out. That applies to all of these. Guidance, I have no idea what they're going to say with guidance. That's really what I'm keeping an eye on personally, is their guidance and their outlook. But I do think Apple will disappoint on earnings. I'll get straight to it. If from a technical perspective, sorry for you tech geeks who might be new around here and haven't seen these analyses before. I know I have RSI here. I know there's MACD, whatever indicators you want to use. I've just found that basic trend lines of support and resistance, have been, specifically in this market, in this crazy volatile market over the past couple months, the single most valid and applicable and effective things you can look at. Okay, so Apple is following this very general channel right here, this obviously rising channel, 2 new highs. So if Apple will need, in my opinion, to extremely impress on earnings, which I don't think is likely, but if they do happen to extremely impress on earnings, I do think that they will retest this upper line of resistance and come up, break the $400 mark, probably hit the $420 area. Again, you guys remember, a $1.6 trillion market cap. It takes a lot of new capital inflow to rise the stock price. That applies to all these companies because they're so big. It's going to take a lot of new capital to lift these shares. Okay, so very optimistic side of me, which I don't think will happen at all, is Apple comes up to retest this line of resistance at 425. If Apple does disappoint, it will likely break this line of support, and then what's likely to happen is it'll create a downtrend from there. Okay, so once that happens, if it breaks this line of support, Apple will likely create a downtrend that's going like this, and I do think that it is very likely that Apple will come back to retest, come back to correct down to like the $320 region. It's set highs back here in early February. It only makes sense to me, to be honest. Like February, you guys, the economy is so much better. People are spending way more money. Again, we're in an inflated market right now. That's a fact. But I think it only makes sense to see Apple come back down to the previous highs it set, at least at the beginning of the year, at around 320. Okay, so that's Apple. I want to move quick here. I don't want to spend too long on each of these, so I'll try to talk fast. So Amazon, I didn't mean to do that. Okay, so Amazon, similar thing, obviously following this uptrend. It is insane to me because for full transparency, I don't trade any of these companies. Like I said in the beginning, you guys, I focus more on smaller market cap stocks, more with more upside, arguably a little more speculative, but that's just how I choose to trade. I just see more potential in that. But I mean, it's insane because I was trading Amazon at the beginning of the year. I remember making a whole bunch of money off some $2,000 Amazon calls, and it's insane to see that they've hit $3,300. So Amazon is catching up to Apple quick. I think they're at $1.5 trillion market cap. That is absolutely insane how far we've come since the beginning of this year in Amazon. And again, Amazon is an amazing company. I'm 100% a fan of Bezos and Amazon and the empire that they've created. I think it's 100% deserved. But again, you guys, the economy is just objectively not as good, and it's not sustainable even after this rally, this relief rally, whatever you may call it. It's going to catch up at some point. You can't, like, what's going on right now can't just happen without any negative effects, even on tech sectors, even on Amazon, because it's consumer focused. Amazon is driven by its customers and like the level of spending within just everywhere around the world. Okay, and once the economy gets truly bad, if it does, hopefully it doesn't, but I just feel like money can't be printed forever without repercussions. Okay, and I feel like it will catch up at some point. So Amazon, if they extremely impress, which again, all of these, you guys, I don't think any of these are going to impress in earnings. I think that the prices right now are priced in. I think this is a buy the hype, sell the news event, and it's been that for a long time. I should have said that for Apple. I do think buy the hype, sell the news, you guys. That's what I think this is. I do think I would not buy any of these companies right now. That's for sure. And I do think that Although they may not disappoint significantly, I don't think any of them are going to like blow anyone out of the water. And you guys keep in mind, I could be very wrong. I could be completely wrong. That's just my gut feeling. Okay. So what I think is going to happen, I think similar to Apple, Amazon will probably break this lower line of support that it set over this relief rally. And I do think we'll see a correction back down to these highs that it set in April. It did spend a lot of time, almost like a month and a half around this area, using this area as a line of resistance prior to breaking out to it, and then it was off to the races. So I think it makes sense for Amazon just to make it easy, come back down to around the $2,500 region. 2,500, it's a pretty nice psychological even as well. So it wouldn't surprise me at all to see Amazon break this lower line of resistance. You can see here, similar with Apple and a lot of these, like they're starting to set this downtrend. So as far as a downtrend is concerned, it wouldn't surprise me to see Amazon follow a trend similar to this, unless they really disappoint on earnings. Then it might be a straight shot down, but see something similar to this until we get back down to the $2,500 region, where it'll probably consolidate and capitulate. All right, so Google, I mean, similar thing, you guys. I mean, they're all just following these general upward channels. Google advertising is, I mean, YouTube. I'm on YouTube right now. I love YouTube. I imagine YouTube ad revenue is doing pretty well. I think a lot of advertisers are going to be funneling from traditional television and other forms of media. Like, no one's outside, so pretty much all outside media, like think billboards and stuff, is on the decline, and digital media spend is on the rise. So I think over time it's a great trend. I think YouTube is a great platform. YouTube is definitely growing as a platform, and digital ad spend will go up over time. Right now it might be a little rough just because we're still in a shocked economy, but we'll see about that. Google, I'm very bullish on their YouTube arm. I like Google a lot. Google is sitting at what's their market cap right now? Significantly smaller. So actually, they're still at a trillion now too. So Google, $1 trillion company as well. I mean, with all these, the thing that reassures me about Google that they might not see a significant correction is that they're only now about at the highs that they set at the beginning of this year, which is still insane, to be honest. But I don't think Google could see as significant of a drop. It could see a drop to these previous highs that it set around like 1470 area, but I think if they do happen to disappoint on earnings, again, you can draw all like these very similar trend lines again. It will follow a similar trend line to this, down to this area where it spent a lot of time at the end of last year, December 2019. So it was flat around here for a solid few weeks, and it did use this area as a point of support, right, or resistance right here, support right here. So it would make sense for Google to come back down to like the 1350 region if it does happen to see a significant correction. All right, let's move on to Facebook and wrap this thing up. Okay, so Facebook, I don't have an upper trend line. It's just kind of a weird, you guys can see here, it's just a weird looking chart. It's definitely capitulating. It's been floating around this area for a few months now, so it hasn't gone much higher. It's just been, there's been a lot of volatility within this like $220 to $250 region. But what I do think will happen is Facebook will definitely break below this line of resistance that it's been setting over the course of this relief rally. I think Facebook, again, even digital ad spend, they're kind of in the same, they're an ad company, so they're in the same kind of field as Google in that sense. But regardless of earnings, I don't think that they'll be able to justify the share price still. Again, Facebook, similar to Google, I think Apple and Amazon could see more significant of a decline than these two companies, because again, they haven't seen as crazy gains as Apple and Amazon. But if it does happen, if it does break this lower line of support, that's a big deal from a technical perspective. If we see that, I wouldn't be surprised at all to see Facebook at least similar to the other ones, you guys, like just come back to the recent highs that it set at the beginning of this year around the 220 mark. I mean, Facebook's been at 220 a lot. I think that's a fair area for Facebook to be. At the low end of the range, I think that we could see Facebook come down and retest this low that it set back here, maybe even lower around here. So some lows it set back in January, once again in May, and then kind of just in this area. I wouldn't be surprised to see it come to the $200 to $205 region as well if we do see really bad earnings come out of Google and a significant correction. Okay, so To sum this up, I know I've said it a few times already, but I'm not long these companies prior to earnings right now just because they've seen such gains. You guys, I love these companies. I utilize them every day. I think they're doing great things for the world, but I do think that they're overpriced in this market. This is like the perfect example of inflation in my mind. Is a lot of people are like, inflation isn't even happening right now. Things aren't getting more expensive. Yes, they are, and it's in the markets. It's reflected directly in the markets. Okay, so I'm waiting with bated breath. I'm sure a lot of people are. The markets were a little funky today, and that's just in anticipation of these earnings and the press conference or the Congress meeting that was just held. So. I'm definitely excited to see what happens tomorrow, you guys. I will keep you posted. Again, I don't post much content in regard to these bigger players, but trust me, you guys, I do follow them. They obviously dictate a lot of the movement within the markets. And as like a market analyst and trader myself, I have to follow these. That's just part of the game. Okay, so please let me know what you think about this video, what other large companies you guys would like me to talk about if that's the case, or just any stocks at all. Again, if you want to know exactly, again, you guys, I don't trade these, but if you guys do want to know what stocks I'm trading, specific, like literally my exact positions, you can check out my complete portfolio daily newsletter. First link in the description if you're interested in that. Exactly as it states, all call options, all put options, all stock positions, even cryptocurrencies, which I'm very into if you're into that as well. So check that out. Along with that, I do send out a daily newsletter during market hours of every trading day, letting you guys know my general thoughts on the market, as well as my trades, the trades I made that day, why I made the trades I made that day, just rationalizing my thoughts, giving you guys my current up-to-date take on the market. Okay, so check that out if you're interested at all. If not, no worries. And again, I look forward to talking to you guys in the comments. Always love learning from you guys. And yeah, please let me know what you guys want to talk about next. Okay, so until then, always remember, you guys, take action, make waves. Peace.